Well, gross domestic product, also called GDP in your neck of the woods, is out today. For the first quarter, the U.S. economy grew at a rate of 1.6%, falling short of the 2.5% that the street and economists expected. But let's break down what in the world GDP is in the first place. GDP is the total monetary value of all final goods and services produced in a country in a specific period of time. And this number essentially is a way to look at the health of a country's economy and growth rate. So how's it measured? Well, here's the equation. You've heard of Cigna before, right? Well, for GDP, just think Cignex. GDP equals consumption plus investment plus government spending plus net exports. C, consumption. That's how much individuals are spending on goods and services. This is the biggest component of GDP in the U.S. Then there's I, the investment. Business investment or capital expenditures, as businesses buying machinery, for example. And then the G, well, that's the government spending. That's how much the government spends on things like military, equipment, infrastructure, et cetera, et cetera. And then we get to the NX, which is net exports, which is exports minus imports. So if a country exports more than it imports, that's a positive contribution. If a country imports more than it exports, then that's a negative to the GDP equation. So let's take a look at US GDP historically. Since the 1950s, there have been notable periods of steady GDP growth and, adversely, periods of contraction. For instance, the 1990s amid the oil shock, the 2000s during the dot-com bubble, and, of course, a negative shock during 2008 and 2009 with the collapse of the mortgage market. In the last 10 years, we've seen GDP stabilizing, upward trends in 2016, 2017, and 2018, but then screeching halt. Of course, comes the COVID pandemic. The U.S. suffered its worst ever quarter, a decline of 28% in Q2 of 2020. You see that on the far side. So we've seen recovery since. And all that puts today's number into perspective. GDP growth of 1.6% year over year. And then zooming out from the U.S., the International Monetary Fund, or IMF, recently posted its World Economic Outlook, calling it steady but slow. Their baseline forecast for global economy is 3.2% during 2024 and 2025. That's the same pace as 2023. The IMF also calling for a slight acceleration in GDP growth for advanced economies. That's offset by a modest slowdown in emerging market and developing economies. The forecast for global growth 5 years from now is at 3.1%, the lowest in decades. So all this being said, the global economy has largely remained resilient despite higher inflation levels, which central banks are globally trying to push back towards healthy long-run levels.